Welcome to the Brent Bruce Interest Rate Update Report, where we take a look and see where home loan interest rates really are, what is making them move, and what to expect from the future. Today is January the 29th, 2024. It's 3:11 p.m. Central Time. We need to take a look and see what's going on with the market because there's a couple of very important reports and meetings this week that may actually determine the direction that interest rates go through 2024. Interestingly enough, this week of last year, 2023, we received the Bureau of Labor Statistics employment reading that actually was covering January and December of 2022-23. That report came in excessively high, showing employment very, very strong, much stronger than expected. And that is what triggered and kicked off the interest rate going up all the way up into the eights, where we were anticipating it going down through 2023. So this report that's coming out this Friday may be the report that determines whether 2024 is going to be the year that we get back moving again or whether it's not. So let me show you exactly what I'm talking about. Then we're going to take a look at where interest rates are. They are much better than where they used to be, and you may be surprised at where they are. So let's take a quick look here. We are going to move quickly. All right. So first of all, let's go over here and take a look at where we are on today's charts. We are up 11 basis points, which is always good to see green. Hopefully that's anticipating something good happening here later this week. We show that the 10-year Treasury is down 8, which is very good. We need to get below that 4.0% on the 10-year Treasury because, again, the 10-year Treasury competes with mortgage-backed securities. That's why that number matters to us. Let's go ahead down here and take a look at where we are on our charts. So we see that we've been having a good rally. When this goes up, that means interest rates are going down. Up, 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 kind of bounced around a little bit here. Now we're between the 50-day moving average and the 25-day moving average, but we probably will be able to break through that. Now, what's important here is that we're above the 200-day moving average, which if you've been watching this report for long, you know that the 200-day moving average can be very difficult. So let's take a look and see why I'm talking about that report that we talked about last year that unfortunately seemed to have been the bomb that went off. So I'm going to go, matter of fact, I'm going to go all the way back 5 years on this report to give you some perspective. All right. So this is a 5-year back report. Let me get myself out of the way. If I hover here, you see that it says February 8th of 2019. These numbers below 17, 18, those for some reason are not correct. But if I float here, March 6th of 2019. All right, so this is where we are. Now remember, when this goes up, when these numbers are going up, that means interest rates are going down, okay? It's important that you understand that when you're looking at this chart. So when we see that we were down here on our mortgage-backed securities chart, that is when interest rates were at their worst, 8.5, 8.25. So when did things turn around for us? They turned around for us on this current rally that we're on here at the end of 2023 and 2024 so far. Started October 25th of 2023. This was the bottom, and we're seeing it crawl up here. And this has been a fight, a lot of ups and downs. But we break the 50, we break the 200-day, and we're moving around here up on the 25-day all the time. The 25-day following us right here. So this was a really big moment when we broke the 200-day moving average, which if you look a little further back, look at how long we've been fighting the 200-day average. Okay, this is all the way back to November 9th of 2021 that we've been under this blue line, the 200-day moving average, convincingly. Now we are convincingly above that, which is tremendously helpful and, giving us hope here. So let's go back to the last time that we had a good bounce. This was in... go down to October 20th of 2022. At the very end of October. When's the last time? The one that we're currently? The very end of October. Okay? So interestingly, October seems to be a turning point that we seem to see rebounds on the mortgage-backed securities and home loan interest rates. Now, if we go back here and we show where we are today, we are approaching February the 2nd. February the 2nd is when the report comes out from the Bureau of Labor Statistics. It's always going to be about this time, the first Friday of each month. So why am I talking about last year? Because if we scroll back here, This we were feeling pretty good about. October 25th of 2022, we were having a pretty good rally. I was reporting to you at that time, and I was telling you that we were coming up against the 200-day moving average and that we were trying to break through the 200-day moving average. So hopefully we were on a trajectory of going above here and seeing home loan interest rates get back into the high fives. Remember that. What happened? Why did that not happen? Well, after we reached our bottom here, trough here in October 21st, or the towards the end of October, we rallied. Here comes a 200-day moving average. What date is that? February 3rd, 2023. What date are we coming up to? February 4th, 2024. That is when the report came out from the Bureau of Labor Statistics that showed tremendously better employment numbers than we had expected, like 800,000 more jobs than what was expected. That would then show that inflation is still strong. And of course, that's why interest rates went up through the year of 2023. I'm pointing that out because here we are coming up against that very report. Again, we're coming up against the same report this Friday, and it is going to have the potential of massive movement in the home loan interest rate market. So let's make sure that we pay attention to that. Let's jump over to where we are as far as interest rates today. Here is the Brent Bruce Daily Conventional Home Loan Interest Rate Scenario. Let's take a look and see. Now, you remember we were even into the eights at one point, 8.25 range at one point. Right now, we are sitting here at 6.625 with a little bit of credit back, $572. PRMG is the bank that we're able to secure that with right now. And once again, let's take a look at some of the other rates. I mean, if you pay a point, you're at 6.25. If you want to get maybe a point back, you're at 7.125. That might give you some closing costs, things like that. I mean, for only $421, you're at 6.5%. So things are much better than where they were about 6 months ago at that 8.5 range, maybe 4 months ago even. Let's take a look at the parameters here of the scenario that I just drew out. They are right there for compliance purposes. All right, so that is where we are right now. Let me know your thoughts if you have any questions. And we're going to pay close attention. And also, just a tiny item that I'm going to add here, and used to be the biggest item that we ever paid attention to, the Federal Reserve is going to be making their monetary policy announcement as to whether they're going to increase, leave alone, or bring down the federal funds rate this Wednesday. That is coming this Wednesday, another big report. We're also going to have some bond auctions that we're going to be paying attention to. We're not really expecting a move by the Federal Reserve this time. Maybe talking about, they might start to give us a hint as to whether we're going to see movements here in March. We will keep you posted. I will update you again soon. Let me know if you have any other questions, thoughts, or any clients that you need to get pre-approved at my interest rates. Give me a call.